Hi guys, it's the trader, and we're here today to look at the daily charts for intraday moves and possibly swing trades too. So for today, I'll be looking at the pound USD, the euro USD, and the dollar XY. Let's dive into the charts. So now I'll ask myself, why am I looking at these pairs? I'm looking at these pairs because they form something which I call a must close bearish signal, which we can actually see here on the daily time frame. The two candles which are printed on Friday and on Thursday. And guys, this isn't just a week, this is institutional footprint. So let's dive into the charts. So I'll just switch to the weekly to get an idea of it. So this is the weekly time frame. As you can see, they are really bearish on this, and the lines here you see is just for the trend, to indicate the trend, and we have a very strong rejection, and price was pushing higher, and then we had this break of structure with price closing lower. Now we have price right in this area, and there is a gap here. I'll move down to the daily so we can picture that very clearly. So this is the gap which we are looking at. This is the gap which we are looking at, and price got to that particular area, and then it formed these patterns. Yes, it's a pin bar, and it's a beautiful pin bar, but I call this the must close. Why? Because price closed below the previous day's candle. After it had wicked out of it, it closed low. This indicates the big boys, they are coming to play in this market. So let's look at this. How would I approach the market? So this is the way I approach this market. I map out the range of the previous candle, which was engulfed, and I use lines to separate them. So I'll explain why I'm doing all this. This particular red line indicates the bearish scenario. It tells me it is a bearish scenario. Why do I have these here? Because I want price to retrace back inside this area. This is like a pivot point where I anticipate price would retrace back into, and I've tested this on multiple occasions and it worked out. I'll be going to the 4-hour time frame to view this lower, so we can pinpoint the areas where the big boys came in. So we have a very strong bullish candle. We had another week out and it closed back inside it. Then we had this one which closed very strong. Note that this candle didn't have any wick at all. The moment it opened, it continued going down. Now let's look at this on the 1-hour time frame. On the 1-hour time frame, it looks pretty clearer to us that the institutions came into the market from this area, because we have very big beautiful candles and we don't see any rejections. You see the little wick above this here, and the close is very strong. You see a wick here, and this, we had a little bit of buyers inside this area, and then price closed way lower inside it. This gives us a pin bar, and we know what pin bars mean. What would I do in this scenario? How would I approach this market? Since I'm an intraday trader, I would anticipate the areas where the big boys came in, where the institutional traders came in. So I'll be looking at the 30 minutes and the 15 minutes to mark out these areas. So from what I can see, I have a fair value gap right in this area here, and I have another fair value gap in this area. So these are the areas that I would be looking at. So notwithstanding, I know this is the fair value gap, I need to look at the last candle before the impulsive move, which is this. So I'm anticipating price to retrace back into this area or this area and drop. So this is what we have here. We have the impulsive moves from here, here, and now let's look at the 4 hour. So we see this actually correlates with here. This is going to be a fair value gap, because when the next price opens, it will open right here, except due to the geopolitical warfare happening between Israel and Iran, we see a spike down, else it's going up. Inside here or here is where we are looking to take that short trade. This has happened on multiple occasions, and where is going to be my take profit area? Well, I'll be looking at the next structural low. Since this is coming from the daily and the weekly and the 4 hour correlates, I'll be looking at taking my profit at the nearest institutional low, which is here. But I need price to retrace back into this area, and I have my stop loss here. I'll be looking to take profits right about here, which is a 1:2.14 risk to reward ratio. It's not bad for a trade. So I'll be moving on to the pound USD so we can analyze it too. Now this is the pound USD. I'll be looking at it from the daily first. So the pound USD, we still have the most closed bearish signal. So as usual, we would always come back to this area and highlight it, because we want the body of this candle that was engulfed by the previous candle. Here we will not call it an engulfing candle. It's a pretty sweet pin bar, and the length is more than 3 times the body of the candle, which is a strong confirmation. And as usual, since we are looking to go short, we would indicate the body of this. So we go lower to the 4 hour so that we can pinpoint our pivots, our pivot areas where the big boys came in. Okay, we have a beautiful fair value gap here, anticipating when price is going to open. Let's go to the, okay, this is it, and I didn't indicate when the day closed. Okay, yeah, so this is the previous day, and this is Friday, this is Thursday, and this is Friday. We have our week out, our liquidity has been swept, and now we'll be looking for price to go down. Where am I looking to take this trade? We have beautiful candles. We have a pin bar here, so I can as well take this out. And right beneath that pin bar, we have a fair value gap. And then we have this too. Now you will ask yourself, why am I looking at these areas? This is the 30 minutes. Why? Because we have this institutional candle here, and we have this too, a pin bar. Notwithstanding, this particular candle here is an exhaustion move. So we are anticipating price to come back to this low here and probably go lower, because with the geopolitical affair happening between US, Iran and Israel, we've been seeing spikes lately, and with the current state of the Strait of Hormuz is being blocked again. It was slightly reopened, and less than 24 hours it was closed. This led to more demand in the US dollar, in the sense that more investors are going to safe haven currencies, which is the USD. They are leaving the risk on risk of currencies. So we are anticipating price to drop lower. Let's look at the 30 minutes on this and see what it gives to us. Okay, the 30 minutes correlates with the order block, the last candle before an impulse, and this is pretty strong because it's a very big candle, and we have a bit of consolidation here. In other words, we have this institutional buyers coming in this area and they are dumping price lower. First things that we need to see, We already know we have a bearish day. We want to see price retrace back into this area or into this area. How would I approach this market? I would wait for price to come back inside any of this area, and then I will look for a change of character on the smaller time frame, which would trigger my entry. And as usual, I will target the nearest institutional low, which is right about here, because this is coming from the daily. So I'll be looking to take an entry right about here and leaving my SL above there. So this particular trade gives us a 1:3.38, which is actually good. So I must emphasize on something. We don't just take the trades. You wait for price to arrive at this area. If it doesn't go there, you can let it be. There are better opportunities in the market. You let it get to that area, because this is a premium price. This is the premium price we can get here. Right about anything here is discount. If you want to be good on this trade, it's here. But not all trades will go in our direction and our anticipation. So we just take the trade and watch our risk. And as usual, risk what you can endure. So now I'll be looking at the DXY, which is dollar index. The last pair I'll be looking at today. Yeah, I have some drawings already on it, so I'd have to erase them. Okay. So this is the dollar XY, and for you being a trader, you really have to look at these pairs, this dollar XY, because it mirrors what the dollar is doing in the market. So I'll take my time on this. So in this pair, what I can see is we have a break of structure, a pretty strong break of structure, and this is coming from the monthly time frame, and we see price pulling back into that area. So I can as well include my fib2, and this fib2 is just I made it in such a way that it works for me. This is the 75%, this is the 50%, and this right here is the 25%. So I when I see a break of structure like this, I just apply my fib2 and I wait for price to get to the 75%. When it gets to the 75%, I don't just take the trade, I wait for a confirmation entry before I take that trade. So we have price on the 75% and price has rejected. Now let's look at the weekly time frame and see what it gives to us. You see, we have beautiful rejections, 1, 2, and 3, with price failing to close below any of this. And we have this, price pulled up, we have this and this, price never closed below it. So for a confirmation for price to be very bullish, we need price to close above this area. We need price to close above this area so we can target the highs here. This will confirm that price really wants to go to these highs here. So notwithstanding, we'll let that be. Let's go into smaller time frames. Now we'll be looking at the daily time frame, which is where I really bask in. So looking at this, we have this. I want to look at the immediate break. We have this, and most people will call it a change of character, but price has closed above it already, so I would likely call it a break of structure. We have price closing right above it. So coming down to a smaller time frame, we have this to price closed above, price closed below this area, and we had a retracement way back up. So in anticipation, we had stronger buyers here. The people below here are willing to buy. Then let's ask ourselves, where is price currently? This is where price is currently. And before that, we have this strong, beautiful candle there. This is an institutional candle. It's a daily candle and it's pretty bullish. Now check every other candle here. Here we'll see some candles like this, these are institutional buyers, institutional big players in the market. When they come in, they move the market. Now, with the same thing happening on the USD and the fair value gap, if you can recall, this same thing is on the Euro USD. Now we see strong rejections and price failing to close below this area, which signals us that okay, price is confirming the bias which I actually had on the weekly time frame. So now we are anticipating price to go take this institutional high. So I'll mark it out. And we don't really have a beautiful close here because price didn't close above this previous candle. If price had closed above the previous candle, then I would say it's a must close. But this week here is a pretty strong week, and I can't let this slide because the USD pairs are already correlating with the same thing. So what am I looking at in this pair? I'll have to separate them, so I'll look at them individually. So this is the 4 hour. We have this pretty long rejection from the candle, and the next candle closed above it. Look at the way the candle closed. It closed very strong, very bullish. So we have institutional buyers in the market here, and price slightly closed above the previous day's open. Above the day's open and above the previous day's close, which signals the strength of buyers. So what are we looking for on this market? We are looking for price to close above here. We are looking for a 4 hour candle to close above here. That 4 hour candle closure above, we need a retracement back into this area for us to take a trade, aiming for this high here. As you can see, we have a very beautiful fair value gap here, a very beautiful area where price hasn't traded into. So we have lots and lots of orders waiting here to be triggered. So I feel this will act like a magnet to drag price into that area. So in other words, this would be my anticipation for this trade. I would leave this here, right about here. I can see it on the 4 hour already, and my stop loss is below the week. Yeah, I know I've not looked at the 1 hour time frame. I'll look at it too. Yes, this is what we have, but still on this, I still feel this is what is going to happen on this pair. And in anticipation, since we have this beautiful gap here, I anticipate price would go higher on this. Mind you, don't trade without a confirmation. You always need a confirmation. Even if price retraces inside here, wait for your change of character and any candlestick pattern which you trust and you know is going to give you what you want before taking that position. Okay guys, have a blessed week and let's print money in the market. Congratulations to us in advance.